Have you ever pulled up the price of silver and just stared at it for a second longer than usual? Not because it crashed, not because it surged, but because it didn't make sense. Inflation is everywhere. Money is being printed at a scale most of us can't even visualize anymore. Technology is using more silver than ever. Solar panels, electronics, medical equipment. And yet silver just kind of sits there, moves sideways, drops when the world feels unstable. And maybe you've had this quiet thought you don't usually say out loud. What if the price I'm looking at isn't the real story? Not fake in a dramatic way, not some movie-style conspiracy, just disconnected, slightly detached from reality. If that thought has crossed your mind, you're not being paranoid. You're noticing something most people feel but don't know how to explain. Because this isn't really a story about silver. It's a story about trust. Most of us were taught a very simple idea about prices. Something is rare, the price goes up. Something is everywhere, the price goes down. That logic works when you're buying groceries or renting an apartment, but when it comes to silver, that mental model quietly breaks. People look at silver and think, if it's so important, why is it so cheap? Or, if inflation is real, why isn't silver reacting? And eventually, the thought turns inward. Maybe I just don't understand markets. That's where the stress begins, because the issue isn't intelligence, it's that silver doesn't trade the way people assume it does. The price you see on your screen isn't coming from people exchanging physical bars of metal, it's coming from a paper market, a futures market, a place where silver exists mostly as contracts and promises, not as something you can actually hold. And that single misunderstanding creates years of confusion. The global silver price is largely set on futures exchanges, especially the COMEX. On these exchanges, traders buy and sell contracts that represent silver, not silver itself. Most of these contracts are never settled with physical delivery. They're closed, rolled over, or settled in cash. The metal never moves. So what's actually being traded? Expectations, leverage, short-term positioning. In the paper silver market, you don't need to own silver to sell silver. You just need enough margin to control a large position. That means massive amounts of silver exposure can exist without massive amounts of silver. This is completely legal. It's how futures markets are designed. They were created for hedging and liquidity. But psychologically, this changes everything, because now the price of silver is being driven mostly by people who don't care about silver as an object. They care about interest rates, charts, macro data, and risk sentiment. Silver becomes a financial instrument, not a physical resource. Meanwhile, physical silver lives in a different world. It has to be mined. It takes energy to refine. It gets used up in industry. It gets locked away in vaults, drawers, and safes. And the people buying physical silver behave very differently. They don't panic sell because of a headline. They don't trade 5 times a day. They don't use leverage. They buy slowly. They hold quietly, often for reasons that have nothing to do with beating the market. So you end up with 2 markets moving at different emotional speeds. A fast, leveraged paper market that sets the price, and a slow, physical market that reflects real-world demand. That gap is where the tension lives. The COMEX isn't a giant vault full of silver. It's an exchange that facilitates contracts. Yes, delivery is technically possible, but in practice, it's rare. The system is built so most participants never want the metal. They want exposure to price movements. And as long as most people are happy settling in cash, the system works. But when physical demand spikes, something interesting happens. You don't always see it in the spot price. You see it in premiums. You see it in delays. You see it in how hard it suddenly becomes to get actual metal. If you've ever tried to buy physical silver during a moment of stress and noticed that the spot price stayed calm while the real-world price jumped, you've already experienced this disconnect. That moment is revealing. It shows you that price isn't a single truth, it's a negotiated story, shaped by incentives. When people say, paper silver is a scam, they're often reacting emotionally, not analytically. What they're really saying is, this price doesn't reflect what silver means to me. And that feeling makes sense. Silver has historically been money for regular people. It's tangible, accessible, not as elite as gold. It represents something solid in a world that feels increasingly abstract. So when the price doesn't respond to fear, inflation, or scarcity the way people expect, it creates a feeling of being gaslit, like reality is being filtered through a system that doesn't care how you experience money. That doesn't mean the system is about to collapse. It doesn't mean someone is secretly flipping a switch. It means the incentives of the paper market are louder than the signals of the physical one. The mental shift happens when you stop asking, what should silver be worth, and start asking, who is this price actually for? The paper price is for traders, institutions, and algorithms. The physical market is for people who want something outside the financial system. Those are different goals. Once you separate them, the frustration eases. You stop waiting for the price to validate your beliefs. You stop feeling like you're missing something. You stop taking market behavior personally. Silver stops being a scoreboard and starts being a tool. Think about the average person. They're working, paying rent, buying groceries, watching savings slowly lose purchasing power. They're not trying to win Wall Street's game. They're trying to stay stable. For that person, silver isn't a trade, it's psychological insurance, or it's nothing at all. And that's okay. Problems arise when expectations don't match reality. If you hold physical silver expecting fast gains, you'll feel disappointed. If you trade paper silver expecting peace of mind, you'll feel exposed. Clarity fixes that. Understanding that paper silver and physical silver serve different emotional and financial roles brings calm back into the decision-making process.
The real illusion isn't paper silver. It's the belief that there's one perfect price that reflects all of reality. There isn't. There's context, there are incentives, there are systems built for efficiency, not fairness or emotional truth. You don't need to predict a silver squeeze. You don't need to expose villains. You don't need to outsmart the system. You just need to understand which game you're playing and why. Progress beats perfection. Clarity beats certainty. And once you see silver for what it is, both paper and physical, the anxiety fades. Not because the system suddenly makes sense, but because you finally do.